Japan's central bank has raised its key interest rate to the highest it's been since the 90s. That brings the Japanese economy back into a world where interest rates really matter.
Now, it means home buyers will likely face higher mortgage payments. Companies will have to think more about borrowing costs, but people with money in the bank or those holding government bonds will get more interest. And Yuko Fukushima from our business desk is here with all the details. So first, Yuko, can you walk us through the central bank's decision and what led up to it?
Sure can. The Bank of Japan's Policy Board wrapped up its two-day meeting on Friday. The bank says it will raise its benchmark interest rate to around 0.75% from around 0.5%. It's the first rate increase in 11 months and takes the key rate to its highest since June 1995. That's around the time when Japan's economic bubble burst. Since then, the country has had extremely low rates, sometimes even getting into negative territory. The BOJ says the main factor behind Friday's decision was that it had confidence wage increases are here to stay. That's based on targets set by labor unions and companies for spring wage negotiations. Workers have seen their highest pay raises in decades over the past 2 years. The BOJ sees gradual wage increases leading to moderate inflation. Policymakers now see a higher possibility the economy will achieve the 2% inflation target in a stable and sustainable way. Looking ahead, the bank indicated it plans to continue raising rates if the economic outlook plays out as expected. So the question is, how high will the BOJ's rate go and how long will it take? When that question was put to the BOJ's governor, he seemed inclined to keep his options open.
We'd like to make our decision on future rate increases after taking stock of how this rate increase affects the financial, price, and economic environment.
I talked to Adachi Masamichi, an economist who used to work at the BOJ, about his thoughts on Ueda's press conference.
I found the communication of Governor Ueda was very, very cautious. I mean, he tried not to make the impression that he's hawkish, but at the same time, he's trying not to impress that he's too dovish as well.
A lot of people were watching the press conference to see when the next rate hike would be, the pacing and the timing. So what is your take on that?
I think the BOJ's base case hasn't changed, that the once a half year of the 25 basis point hike to 1% sometime in the middle of the next year. And another hike is still probably in their mind because that is what the market are expecting. My sense is that the market perception or market expectation of the terminal rate is now catching up to mine, which has been 1.5% for more than 1 year.
So why is he so vague, or why is he not telling anything about the future monetary policy?
Because I think he's still concerned that about the uncertainties from a global economy, I mean, especially U.S. economy. And so in my view, Governor Ueda or BOJ is always cautious not to, give the guideline first, then suddenly something happened, then they cannot do it. So that's credibility of the communication goes down. Therefore, they don't want to make a mistake.
If the yen weakens further, do you think that will impact the monetary policy of the Bank of Japan?
Yes, of course. I think the so-called the monetary policy reaction function. I think for the BOJ, of course, they're talking about wage growth is a key parameter to determine the this underlying inflation. But from what they are doing, what we can tell is that the reaction function of the BOJ is definitely U.S. economy and currency.
So if the yen weakens further, then the pace of the rate hike could quicken.
Yes, it's possible. End of April. That's one possibility if the yen keep depreciating against US dollar. But at the same time, US is cutting a rate, right? So dollar yen goes to beyond 160 or 165. When the Fed is cutting a rate, that's a little bit challenging as well. So that's why I don't think that many people are expecting BOJ to raise the rate in April. And I think the current market consensus is sort of broad consensus is June, July, and maybe July is more likely. I mean, that's a perception of the market. Although I'm expecting June though.
Well, it took the BOJ almost a year to finally pull the trigger on higher rates. Now we'll have to see if its next move comes sooner than that.